Welcome back to This Week in Finance. I'm so glad you are here. This is your weekly wrap, the show where we recap everything that moved markets this past week and tell you exactly what you need to be watching heading into next week. We are covering the period from Monday, May 4th through Friday, May 8th, 2026. And what a week it was. 6 straight weekly wins for the S&P and Nasdaq, fresh all-time records, a strong jobs report, AI earnings madness, oil volatility from Iran tensions, and crypto holding firm despite global chaos. We have a lot to get into, so settle in. Before we dive in, the standard but important reminder: everything you hear on this channel is for educational and informational purposes only. It is not financial advice. Investing carries real risk and you can lose money. Always do your own research and consult with a licensed financial professional before making any investment decisions. Now let's get into it. Let's start with the headline numbers. The S&P 500 closed Friday at 7,398.93, gaining 2.3% on the week. The Nasdaq Composite surged to 26,247.08, up 4.5% on the week. Both indexes hit fresh all-time highs and posted their 6th straight weekly win. That is the longest winning streak for both indexes since 2024. The Dow Jones Industrial Average closed at 49,609.16, lagging with a weekly gain of just 0.2%, weighed down by energy and materials weakness. Here is the key tension to understand. While the S&P and Nasdaq are at records, market breadth is at one of the narrowest levels in decades. The equal weight S&P remains stagnant. That means a thin layer of semiconductor and AI infrastructure giants are doing all the heavy lifting. This is a divergence pattern that historically precedes corrections. So even though we celebrate the records, position sizing matters more than ever. Now let me walk you through it day by day. Monday, May 4th opened cautiously. Iran tensions and renewed military exchanges near the Strait of Hormuz had markets on edge. Stocks dipped slightly. After the bell, Palantir reported earnings. Revenue beat, earnings per share beat by 37%, and full-year guidance was raised to $7.64 billion. But the stock dropped 5%. Why? Valuation. Palantir trades at 46 times forward revenue. The market lesson: beats alone are no longer enough at extreme valuations. Tuesday, May 5th was the explosive comeback. The S&P 500 closed at a fresh record of 7,259. The Nasdaq hit 25,326, also a new all-time high. The Dow climbed 356 points. 3 forces drove the rally: falling oil prices as the initial Iran ceasefire held, strong earnings momentum with 84% of S&P companies beating expectations this season, and massive AI guidance upgrades. Wednesday, May 6th was AMD Day. The chip giant popped 13% after blowout guidance. CEO Lisa Su said agentic AI demand is driving an absolute surge in CPU sales. ARM Holdings also jumped 13% ahead of its own earnings. Disney reported in the evening with a mixed result. Thursday, May 7th saw a modest pullback after a tech-led decline. Iran tensions flared again with a tanker incident in the Persian Gulf. The market took a breather. Friday, May 8th delivered the main event. The April jobs report came in at 115,000 jobs added, well above the consensus estimate of 55 to 65,000. Unemployment held steady at 4.3%. Job gains were concentrated in healthcare, transportation, and retail. The strong report calmed recession fears, lifted markets to fresh records, and pushed the S&P up 0.84% and the Nasdaq up 1.71% on the day. Importantly, federal government employment continued its decline, shedding another 9,000 positions, now down 348,000 jobs since October 2024. Now let's break it down by sector, because this is where you need to focus your attention as an investor. First, technology. Tech absolutely dominated this week. The Nasdaq's 4.5% weekly gain was almost entirely driven by AI infrastructure names. Nvidia, Apple, and the Magnificent 7 ETF all hit fresh intraday highs Friday. Alphabet extended its 2026 record high count to 16, the most for any major stock this year. AMD's 13% guidance pop changed the AI narrative. ARM Holdings rallied 13%. Taiwan Semi hit highs. The clear theme: real AI revenue is being rewarded, AI spending without revenue is being punished. Second, energy. Volatile. WTI crude finished the week around $95, down from over $100 at the start. Brent crude near $100. Oil dropped early in the week on initial peace progress, then climbed back as Iran tensions reignited Thursday. Energy stocks underperformed the broader market. ExxonMobil and Chevron lagged. The trade hinges entirely on whether peace talks resume next week as expected. Third, financials. A solid but quiet week. Banks benefited from the strong jobs report and stable yield curve. The 10-year Treasury yield is sitting at 4.39%. Citi's CEO warned of more protracted inflation, which is keeping markets cautious about future rate paths. Fourth, consumer discretionary. Mixed. Travel and leisure names continued to perform well. Retail showed cracks given high gas prices, with California pump prices still near $6 per gallon. Wendy's and other restaurant names had a soft week. Fifth, healthcare. Eli Lilly continued its strong run from last week. The jobs report showed healthcare adding 37,000 new positions in April, the largest sector contributor. United Health continued to struggle. Biotech had a mixed week. Sixth, industrials. Caterpillar continued to ride the AI infrastructure build-out theme. The sector benefited from strong economic data and continued data center construction demand. Seventh, materials and energy. Both lagged on the week. Gold finished around $4,550 per ounce, barely moved. The dollar strengthened on the strong jobs data, putting some pressure on commodities. Now, let's talk crypto, because this was a fascinating week for digital assets. Bitcoin opened the week at $76,960 on Monday. By Wednesday, it ran all the way to over $82,000, the highest level since January. Then it pulled back over the back half of the week as Iran tensions escalated. Friday's close near $79,340 left the weekly chart with a potential rejection pattern at $80,000. The key level to watch next week is whether Bitcoin can reclaim and hold above $80,000. If yes, the bull setup remains intact. If not, expect a retest of 76,000 support. Ethereum had a quieter week. It opened at around 2,322 and finished slightly lower around 2,280. It is being held back by the same Iran-driven risk-off sentiment that caught Bitcoin late in the week. The big picture for crypto remains constructive. Bitcoin is still up over 17% in the last month. Ethereum is up over 13% in the last month. Both have shown remarkable resilience during the US and Iran conflict, and crypto legislation continues to advance through the Senate, which is supportive long-term. Now, let's talk about next week, because there is a lot to watch. First, US. And Iran peace talks are expected to resume as early as next week. Any progress will drive oil lower and risk assets higher. Any breakdown will spike volatility immediately. Second, the earnings calendar is lighter but still impactful. Cisco reports Wednesday, Walmart reports Thursday, Applied Materials reports Thursday after the close. These will give us reads on enterprise spending, consumer health, and chip equipment demand. Third, economic data. CPI inflation data drops Tuesday, which is huge given the divided Fed. Producer prices come Wednesday, retail sales hit Thursday. Any inflation surprise will move bonds and stocks immediately. Fourth, Fed speakers are out in force following the 8-4 split vote 2 weeks ago. Multiple regional Fed presidents are scheduled to give speeches. Watch for clues about whether the dissenters are gaining ground or losing it. Fifth, watch the cryptocurrency legislation moving through Congress. A breakthrough could send Bitcoin above 85,000 quickly. Now, my Monday stock picks video drops Monday morning with the full breakdown of names to watch, but here's a quick preview of what I will be covering. I will be looking at the AI infrastructure pure plays that benefit from the AMD and ARM narrative shifts, including some lesser-known names like Onto Innovation and Comfort Systems USA that are seeing massive analyst upgrades. I will be covering at least one defense technology name given the ongoing Iran tensions, with AeroVironment a strong candidate at 50% analyst upside. I will be looking at one quality healthcare pick benefiting from the strong jobs report tailwind in healthcare hiring. And I will have at least one crypto-adjacent pick, possibly a Bitcoin proxy for investors who want exposure without buying the coin directly. Tune in Monday for the full picks with entry points and price targets. Let me wrap this up. This week was historic. 6 straight weekly wins, fresh records on the S&P and Nasdaq, a massive jobs beat, AMD's AI guidance shock, Palantir's valuation lesson, crypto's resilience. Iran tensions cooling and reigniting. The bottom line is that the AI rally is real, the economy is stronger than expected, and the bull market is alive. But narrow market breadth, stretched valuations, and and ongoing geopolitical risk mean you need to stay disciplined. Do not chase. Wait for pullbacks. Position size carefully. If you found value in this video, please do me a favor and hit that like button. It genuinely helps the channel grow and helps more investors find this content. If you are not subscribed yet, smash that subscribe button and hit the notification bell so you do not miss our Monday Stock Picks video where we go deeper on the names we just previewed, our Wednesday Market Pulse short for the midweek check-in, and our Market Spotlight deep dives where we go in-depth on a specific topic. Drop a comment below and let me know what you are watching for next week. I read and respond to every comment. As always, do your own research, protect your capital, and we will see you Monday morning with our top stock picks for the week ahead. Take care.